Let us discuss about the shareholders' expectations from companies. Many shareholders who invested as the primary shareholders, initial subscribers or secondary purchase in the share market, secondary sales from purchasers, means delivery based investment. Though earlier there were crores of shareholders were there, means people were investing in shares. Now they reduced it to small number of people investing in shares, maybe in mutual funds, equity shares or bonds, like that. Why the investors are reduced from, why the investors went away from share market, equity share market, investment in shares, company shares market, and what are the expectations of investors in shares, maybe equity, preference or any other shares. So what they expect and what is happened. There are so many shares were issued as an initial subscriber at the rate of 500, 600 rupees, means face value is 10 rupees, premium price was around 5 to 600. But after some time, the share became traded at 150, 200, 300, like that. Means the investor has lost 50% of investment after some time. And many shares were traded at hundreds of rupees, they came back to 10 rupees, 5 rupees, like that. So why it is happening like that? And what precautions investors should take? And there are also some shares which has given highest results to shareholders. We can say Infosys, Wipro, Reliance, and there are so many companies, TCS, there are so many companies which have given very good results to shareholders. Reddy Labs, see, these companies have given a lot of returns to the shareholders. They took care of the shareholders' protection first and distribution of as dividends to shareholders. So why there is so gap between the high price shares, distributed dividends liberally, and those who have reduced the share price to half, 1/3, 1/4, 1/5, like that. So these are the gaps between the two sides of the gaps in the share market. Means investors in shares, by many common people, middle class people has invested in shares and they have lost, some people has lost money and some people has gained more also. Why there is so huge gap, and what are the expectations of investors in shares? So every shareholder, every equity shareholder expects safety of investment first. The money should come back to him as and when he required, and also there should be income on the shares, maybe in the form of dividends or maybe in the form of rights or bonus shares or something like that. And also liquidity, means every shareholder should be in a position to encash his investment in shares as and when he wants, means at the price prescribed in the share market or at the time when he wants to leave from the share market. So all these three things, safety of investment, income on investment, liquidity of investment, these three things will decide the investment in shares by shareholder. Another expectation is there are so many shares trade, face value is having, some shares having 1 rupee, some shares having 2 rupees, some shares having 10 rupees, some shares having 1000 rupees, some shares having 100 rupees. So all this is giving a lot of confusion. So what a shareholder expects is there should be a uniform face value of each shares, maybe 10 rupee share, maybe optimum, maybe better for each share, so that there should not be different face value of different shares. Means there should be face value of 10 rupee shares only, and it should not be any other value of 1 rupee, 2 rupees, 5 rupees, 200 rupees, 1000 rupees, like that. It should be only one face value, so that to avoid confusion and to ensure clarity to the investors. So that is a better option, one is better suggestion to have uniform face value for all the shares traded in the share market with 10 rupees face value. And next, one more confusion emerges is due to different accounting years, means financial closing period for different companies. Of course, in India, uniform accounting year has started from 1/4/1989, so that all organizations, commercial entities, financial year should be from April to next year March, and the same is followed. But there are some organizations which follows other different years, other accounting years, other accounting period, which creates some confusion to the investors. So it's advisable to have uniform accounting year of financial year, 1st April to 31st March next year. to avoid confusion, to ensure more clarity to investors. And next expectation by the investor is there should be a responsible and accountable internal management, because there are many lapses happens unintentionally or intentionally at the hands of the internal management if the internal management is not efficient enough, not capable enough. And also many success will come, more profits will come to the organization with efficient and responsible, accountable internal management. So what we expect is, of course, board of directors may be policy makers, government regulations may be there, but when you are going actually implementing, actually carrying on the commercial activity, it will be carried on by the internal management only. That internal management should feel the responsibility and accountability to shareholders as well as the regulators as well as any other authorities, tax authorities like that, so that the efficient, responsible, accountable internal management should be assured to the shareholders. The shareholders should not expect the internal management is weak. Internal management should be strong enough to prevent defaults, delays, diversions, but it should not be dependent on outsider to detect it. Means prevention is better than cure. Detection comes only after the wrong thing happened. Priority should be to prevent the wrong thing, and detection if anything happened unintentionally. So if any intentional mistakes done by the internal management, that should be protected and that should be acted upon in advance before detecting by the third party. Outsiders, maybe advisors or auditors, or we can say valuer, somebody regulators like that. So internal management is most important part of a commercial organization, company. The next, what they expect is, every shareholder expects cost analysis, because industry consists of so many commercial entities, commercial organizations which are performing very well, which are not performing well, or which are not performing at all. So there is a wide gaps between the high performed, low performed, or non-performed units. So the gap should be made known. What is the reason for that? Why there is a gap of the performance? So that will be covered, that can be covered, explained with the cost analysis by the expert third party opinion of the cost analyst, so that the reduced cost will enhance more profit. Enhanced cost will increase the loss, reduce the profit. So it should be cost analysis compared to other organizations of the industry should be compared and made more effective, efficient enough. The internal management should use the resources for more productivity, natural and human resources, financial resources also. So that cost analysis with industrial performance, total industry performance or global industry performance will give some lessons, some suggestions, some guidance to the commercial organizations which is not performing well. Next, another important aspect for shareholders' expectation is valuations. Many of the balance sheets are based on valuations. They follow different methods. One is actual value method, another is market value method, and another is approved by government value method, or some expert opinion professional value. And all this gives a lot of confusion to the investors. Of course, sometimes it may be correct, sometimes it may be wrong. So there should be one single form of third party opinion or actual cost. Actual cost should be the basis for valuations. If not, it should be based on the expert opinion or valuation made by the valuers. This valuation itself will make many changes, will affect many commercial organizations' profits and appropriation of profits, adjustments also. So there should be uniform valuation method as far as unsold stocks or unsold products and anything in between, stock in progress like that. But for others, it should be based on the cost method only. So that will give clear idea what is going on, how the company is performing to the investors in shares. And one more suggestion is because everything is dependent upon the actual accountable, responsible, efficiency performance of internal management. So it is better their management remuneration is based on the profits earned. Of course, fixed may be assured. In addition to that, some percent of profit may be assured to the management for giving success or making more profits to the shareholders or investors. So thus management remuneration that can be at two stages. One is for monthly or regular payment, and another is addition to that is share in profits, or we can this regular payment totally may be in percentage profits. And one more thing we are forgetting is investment is different from management. Investment is only investor money, the person invests, the investor will invest and keep and stay away, and the management will look after the funds and utilization of financial, natural, human resources for higher profits to be distributed to the shareholders, to be for the benefit of shareholders. So the management is the working hand and a shareholder is investors. So the management is to be handled scientifically. Investment, any blind man can also invest, any innocent, illiterate also can invest. So that should be, there is a lot of gap between the management and investment, and management should not be based on the investment. Sometimes higher investment may cause more damage to the management. Sometimes efficient management may be more useful than the investment. Of course, if the investment is carrying on the management, they will feel the pinch of loss. But if the investor is not active and the management is active, what is required is effective management. That may be by investor or by the another professionally managed company. So that should be the basis. If the remuneration is based on the net profits earned by the company, that will give more encouragement to the management. Next expectation by the investor or shareholder is the change of management if there are losses for more than 3 years. Means if the management is not capable enough to convert the organization or commercial entity or company into profits in 3 years, it may be considered as not successful, and change the management if there are losses for more than 3 years. So that should be assured by the regulators. That assurance should be given to the regulators to change the management if there are losses for more than 3 years. If the same management continues for more than that period, and the losses may multiply, the losses may enhance, that will result into more losses to shareholders. Of course, the investment risk is covered only after the share capital he has made, but he should also be protected of return, safety of investment, and liquidity also. So one of the required measure is to make the internal management efficient, is to change the management if there is a loss for more than 3 years, and as well as the analysis of the funds used or resources used in the last 3 years, which made the company to performing losses. It will make the management responsible, accountable, efficient, and also will give some lesson to the management. And one more expectation from the investor is the management should hold at least 51% of the share capital. As stated earlier, investment is different from management. Of course, the management should know the pinch of the loss. If their investment is more than 51%, it is considered, it is expected that they protect their investment. The management investor also protect, the management will protect their own investment as well as the other investors also. So if as much as the management investment is there in shares in the shareholder capital of the company, the less risk, or you can say the accountability, responsibility, efficiency of the management will improve. Mainly because they feel the pinch of loss of investment. So if there is one suggestion is there, it should be the capital should be, the management should have at least 51% of the share capital of the company. And another important thing is information. The company will provide information to the shareholder in the form of annual reports, documents filed with the register of companies, because that is public document. Any shareholder can get, any public at large also can obtain the information about the company performance, company constituency of company, details of directors, and details of management, turnovers. All these things can be known to anyone, including shareholder also. The quality of the information is most important. The correct information will lead to confidence of the investors about the management. That will increase. Correct information will enable to take correct decisions, to change or to make alterations, to make more efficiency use of resources for higher return of income, return on net worth, earning per share, PE ratio, and high value to assets and reduce liabilities. So this information about what is said, information about the quality and correctness of the information provided to the shareholders of the assets and liabilities, income earned, and also other details should be in correct form, should not be window dressing. Nowadays we are seeing so many companies with the intention to show more profits, they are enhancing the value of assets of receivables and stocks and some other assets high value so that to show more profits. So that is window dressing. That should not be allowed. That should be severely acted upon or punished. The internal management should be punished for that wrong information and that will mislead the shareholders. Not only shareholders, regulators, and as well as image of the company and also image of the industry, image of the country also. So that should be dealt with tough action against the management. Means incorrect information should be dealt in toughness on the management and on their monies. But independence of the and verification of the correctness of information. How to verify the correctness of information provided by the management to the shareholders, regulators, and other authorities. That information should be verified, should be reliable with the quality, time, and requirement of information for correctness. And this should be verified by the independent expert third party opinion, maybe statutory auditor, tax auditor, cost auditor, some other authority to evaluate the performance for correctness of the information provided to the shareholders as well as regulators, and that should be verified or certified by the third party expert opinion with the professional knowledge, maybe by chartered accountants, cost accountants, or MBA, anybody that has to be verified and given correct information to the shareholders and public at large. And one more suggestion is there are many companies, those who are earning good profits, but they don't declare the dividends to shareholders. Management says that it is the discretion of the management how much to declare as dividends to shareholders, and that will discourage the shareholders. So there should be the regulators should prescribe the standard percentage of profits should be distributed to shareholders to encourage more and more investments in the company as well as in shares in other companies also. So that fixed percentage of profits should be distributed as dividends, bonus to shareholders, so that they feel encouraged. Shareholders will be encouraged to invest more also, not only maybe in this company or some other company also, and also there will be a clarity of the performance and efficiency, and also medium term return, small term return, short term return to the investor to encourage the shareholders. So that fixed percentage may be 30% or 40% or 50% of profit earned, but it should not be less than that. So that if it is less than 10% of the profits only distributed, it may get meager amount. That may not be sufficient to encourage the shareholders. It should be at least one third of the profit should be distributed to shareholders. Of course, they can go for investment, additional investment when they require additional funds for additional expansion or like that. But the existing shareholder also should be encouraged with returns on investments made in even a short period, medium period, longer period also. And one more suggestion is, if the company is going for losses, performing in losses for more than 3 years, the company may be asked to change the management and merge with other profit-making company, because the company should not be closed and should not become inoperative, and that should be the company should perform with the help of the successful management, guidance, advice, investment by the profit-making company, and both will flourish because of additional strength of knowledge, expertise, administration capacity, investments like that. Of course, there may risk also. Even profit-making company also may be turned into loss-making company. So, prevent such situation. The loss-making company may be merged with bigger profit-making company. Credit and image of the profit-making company will make the loss-making company also flourish, at least after some time. So that is the one suggestion that may be accepted, may be considered, or may not be considered. That should be in the hands of regulators, but not only in the hands of shareholders or company. And delist. One more problem is delist. There are some companies which company shares are delisted from the share market. That every investor has having only one option to liquidate their investment is selling in the share market. If that is also closed, what the investor should do? He will be having shares in papers, but he cannot convert the money into cash for his needs. So the delisting should not be allowed of any company share, because that is the only option available to shareholder, because he can sell his shares and he can cash it. One of the assurance given by the Act to shareholders, and that should not be deprived to the shareholders. So delisting should not be allowed, even if there is a loss, even if there is less value traded, that company share should be traded in the market, and that will ensure the liquidity to the shareholders. May not get money, may not get income, but may get some portion of their investment or some percent of their investment back at the time of sale of shares. The important role of advisors. So every company is advised by professionals or group of professionals like cost analysts, advisors, valuers, auditors, secretaries, etc. So all this group should be appointed independently by independent authority. It should not be by the company itself, because if it is appointed by the company, they may be under the influence of the management. They may not be in a position to disclose, reveal the facts about the company. So if they are appointed by independent authority, maybe auditor or valuer, auditor, secretaries, advisors, if they are appointed by independent authority or third party, those who are not under influence of the management, they can give better service, they can give better advice to the company. Of course, they may not be part of the internal management, but their advice will become more valuable. It's like independent directors. These people will play important role in policy making. Those are having access directly to the board of management, and they can advise them so that their advices may be considered, and their expert opinion, third part opinion, will be considered to make the company for higher profits, to earn more profits. So that is, and also with regard to compliances, there are so many compliances to be followed by the company with register of companies, SEBI and the Reserve Bank, and all these are so many income tax, direct taxes, GST, all these are so many compliances to be followed. So all these compliances should be under the regulation, means should be of the third party, means independently appointed professional, maybe auditor or secretary, those who can give true picture about the facts of the company, and they can disclose, they will be made responsible for correctness of the information provided to the shareholders, regulators, government, capital market also. All these advisors, all these outsiders should be appointed by independent authority, not by the management of the company, so that they cannot be under influence. They may not be under influence. Another expectation from the shareholder is the utilization of natural, human, financial resources for highest productivity. Means the resources used, financial resources, natural resources, human resources used should ensure highest productivity of the resources used. Means every time the performance should increase in such a way the highest productivity be achieved, and highest productivity ensures higher profit ensures higher dividend to shareholders and higher value to share also. So every shareholder expects all the resources of the company are used to achieve higher productivity, whether it is a financial, natural resources, human resources, material resources, all resources, time resources, everything should be used for highest productivity. That can be done only by the internal management, cannot be expected to be done by the outsider. Means performance by the internal management, and upgradation also, upskilling, upgradation, skill development, everything should be done by the management only, internal management, to achieve highest productivity and review performance and reanalysis, revalue the performance and re-establish higher gains for the resources used. Next, one more expectation is many of the companies are facing problems with regarding marketing. So companies are having shortage of stocks in the market. Some companies are having excess supply of stocks in the market. So there are two extreme sides. So the marketing problem, see, there should not be excess supply, there should not be shortage of supply. If there is a shortage of supply, the consumer may shift to other product. If there is excess supply, the consumer may underestimate the importance of the product, undervalue the product. And that will increase the financial cost and also administrative cost, storage cost. That will increase the cost and reduce the profit or increase the loss also. So to avoid that situation, the company should have advanced price mechanism for consumers, which ensures not only the price, the quality, quantity, supply. These three things in addition to price should be issued to the consumers. Means advanced price mechanism by the company should prescribe what will be the MRP, maximum price to the consumers, and what will be the quantity they can supply, and quantity, when and how can supply, and all these things should be assured to the consumers so that the consumer market maintained. Now the maintenance, enhancement of consumer market is most important aspect of a success of every company. So consumers are the ultimate judges for the success of the product, and they should be comfortable, they should feel comfortable for using the product or service of the company. When they will feel comfortable means when they assured of the supply on time and the quality they expected and the price they expected and also the quantity also. Everything expected according to the expectation of the consumer. That will ensure more profit. And another important thing what we forget is what we generally, there is a lot of confusion, lot of work is there, lot of compliance required is loss of the land. Means when a company is performing in India, it should comply with the lands of the laws of the land. If it is performing in US, and it should comply to the laws of the US, and if it is performing in Africa, the African laws should be complied by the commercial organization. So with regarding what are the laws? The laws may be with regarding taxes, eco balances, labor, staff welfare, quality standards, and all these things should be complied by the company in performing the commercial activities. So this laws of the land requires lot of compliance in the form of information to be provided to not only to the shareholders but also to the regulators of that state nation, government of that nation, and due taxes to that government, and as well as information to the parent nation, means first nations, investor nations, first company nations, laws of the land also. So all this will ensure, and happy shareholder will always enhance his investments in the company, maybe in the form of bonus shares, right shares, or some purchasing, expansion also, any shares issued in expansion also. So all these things require, and regarding one more thing, valuation of share is also most important. When you are prescribing the value for the bonus shares or right shares, what is the amount to be paid by the shareholder, and that valuation also plays an important role in prescribing, in attracting the investments from existing shareholders. So the valuation of share, return on net worth, return of investment, and all these things should be done by the independently appointed expert third party opinion, so that the opinion cannot be under influence, and the correct information, right information, timely information will reach the investor to comfortably attract investment from shareholders, or also comfortness to the shareholders.